Welcome to today's session. I am Dr. Sonam Bhadoria, Assistant Professor at the School of Management Studies, Swami Rama Himalayan University. Today we will discussing another important institution in India's financial market infrastructure, which is Securities Trading Corporation of India Limited. Commonly it is known as STCI. STCI plays a critical role in the government securities. How? Basically, it controls the market and the money markets, facilitating efficient trading and liquidity. While it might not be as well known as banks, stock exchanges, but it is a vital cog in India's financial ecosystem. So, let us explore the importance of STCI. So, if we talk about the background and the formation of STCI, so basically the Securities Trading and Corporation of India Limited was established in 1987 as a wholly owned subsidiary of Reserve Bank of India, the Central Bank of India. It was created with a clear objective to develop a robust and efficient secondary market for the government securities. In the 1980s, India's government securities market was nascent and fragmented. The market was lacked the transparency, the liquidity, and that was not adequately participating formed institutional investors. STCI was envisioned as a market maker as well as the facilitator to enhance market liquidity, bring transparency, and also encourage wider participation from the investors from all over the world. Over the years, STCI has evolved and expanded its services beyond its initial mandate, adapting to regulatory changes and the recent market needs. So, let us move on to the next section, which is about the ownership and the organizational structure of STCI. As mentioned, STCI is wholly owned subsidiary of the Reserve Bank of India, which highlights its importance and the role in Indian financial system. The governance of STCI is aligned with RBI's policies and it operates under the supervision of RBI's regulatory framework only. STCI's management team involves professionals with deep knowledge and deep expertise in treasury, government securities, and money market operations also. This close relationship with the RBI gives STCI a unique position in India's financial ecosystem, acting as a bridge between the central bank and the market, or we can say the money market participants. So, let us move on to the section number 3, which is the core functions of STCI. STCI's primary roles involves around the government securities market. Its core functions includes market making in government securities. STCI acts as a primary dealer in government securities. It committed to buying and selling securities to ensure market liquidity in the country. Its primarily dealers are essential in supporting the government debt markets functioning, by facilitation auctions and secondary market trading also. Next function of STCI is brokerage and trading services. STCI provides brokerage services to a wide range of clients, including commercial banks, mutual funds, insurance companies, and foreign institutional investors also, by helping them trade government securities efficiently and within time. Next function of STCI is investment advisory and research. STCI offers research and advisory services related to interest rates, debt markets, and macroeconomic trends, aiding investors in making informed about the recent macroeconomic indicators. Next function of STCI is money market operations. STCI participates actively in money market instruments like treasury bills, repos, reverse repos, commercial papers by enhancing liquidity and efficient price discovery. Next function of STCI is custodial services. It also offers custodial services ensuring safe holding and settlement of securities for its clients as well as the investors. So let's move on to the next section, which is the fourth section of the today's lecture. It is focusing on STCI's role in government securities market. So to understand STCI's significance, we need to understand the government securities market before, because government market is basically controlling the STCI's role. Government securities are debt instruments issued by the Government of India to finance its fiscal deficit and manage monetary policy. The government securities market needs liquidity so that the investors can buy or sell securities easily without the large price changes. It also needs transparency to ensure fair pricing and investors' confidence. It also needs efficient price discovery to reflect true market conditions. STCI, as a primary dealer and market maker, contributes to all above their factors. These factors by committing to continuous bid and offer quotes for government securities, thus enabling a two-way market. How? Let's see. Providing market information and facilitating auctions conducted by the RBI. It also helps in supporting settlement and clearing activities in collaboration with clearing corporations, as we discussed CCIL. Recent RBI reports show that STCI is among the top primary dealers by market share in government securities trading. STCI is playing a pivotal role in Indian economic system. So let's move on to the next section, which is going to explain STCI's contribution in the market development as well as the reforms in the Indian financial system. So STCI has been actively involved in various initiatives to develop the government securities market. These initiatives are encouraging wider participation through education, training programs, and investor awareness campaigns. STCI has helped bring diverse participants such as insurance companies, mutual funds, and foreign investors into the market of India, supporting introduction of new instruments STCI is also supporting the introduction of new instruments. STCI has played a role in introducing newer debt instruments like treasury bills, dated securities and floating rate bonds, which are the new products in the Indian investment market. It also helping in the market infrastructure development. STCI collaborates with RBI and other institutions in improving electronic trading platforms like settlement systems and regulatory frameworks also. It's also working in the research and publications by publishing regular market updates, regular market reports, bulletins, interest rate forecast. STCI contributes to market transparency also. It helps in making aware the investors more knowledgeable. Let's move on to the section 6 of the lecture, which is basically the risk management and the compliances at STCI. So, given its crucial market role, STCI adheres to strict risk management protocols. Let's see how. So, first is the credit risk management. It ensures counterparty dealing, or we can say it ensures counterparty creditworthiness and limiting exposures. STCI controls operational risk. How? Let's see. Robust internal controls, audit mechanism and IT security, or we can say information technology security to prevent fraud and operational failures. It regularly complies with the RBI and SEBI. STCI complies fully with RBI guidelines and the SEBI guidelines. It also markets the risk management. It continuously monitors the interest rate movements, liquidity risk and price volatility in the Indian market as well as the capital market, or we can say the money market. These risk frameworks protects STCI, its clients and the broader market. Let's move on to the next section of the lecture, which is basically discussing the recent developments and the future outlook of STCI. So, as we discussed, it is continuous to evolve in line with the market and regulatory changes. It continuously updating itself according to the market changes and the regulations. It's increasing the use of technology platforms for faster, transparent trade execution and settlements. It is adopting the new type of electronic trading platforms for government securities. These platforms are enabled with the latest technologies. It enhanced focus on green bonds and sustainable finance, which is the need of the today's world. We have to think green and go green, and then to plan to expand its role in the money market segment, including repo transactions and collateral securities transactions as well as their management. It is increasing collaborations with domestic and international market participants to align with the global market needs and the global best practices also. So, the future roadmap of STCI includes digital innovations, expanding market access and supporting the Indian government's fiscal policy compliance to make it efficient and let the goals be achievable. So, let's move on to the next section, which is the summary and the key takeaways from the today's session about the STCI. So, the most important thing is when it was basically established. So, STCI was established in 1987 is a wholly owned subsidiary of Reserve Bank of India to develop and support the government securities market. As we discussed, it acts as a primary dealer and market maker, enhancing liquidity and transparency in the market. STCI offers trading, brokerage, research, and custodial services also. STCI plays a vital role in market reforms and investor education also. STCI adheres to rigorous risk management and compliance framework. These compliance are in line with the RBI and the SEBI's guidelines. The institution continues to innovate and contribute to the evolving Indian financial market. So, thank you very much for joining today's session. I hope this lecture gave you a comprehensive understanding of Securities Trading Corporation of India Limited and its importance in India's financial markets, or we can say India's financial system. In our next session, we will move forward to explore depository system in India, which is an equally important topic for understanding Indian financial system.